Dear friends, I welcome you to my YouTube channel Banking and Finance on Tube. I am Professor Muralidhar Prasad, Professor in Banking and Finance area. If you are visiting for the first time my channel, please subscribe. Please press on the bell icon so that you will receive all my latest video notifications. I also request you to please share and like my videos. Today I will be talking to you on accounting definition. In my previous videos, I already discussed with you what is the need and importance of accounting. Accounting definition says if you look at pre 1941, accounting was considered just only as a simple process of recording. Means all the data was collected by an officer or a designated person. He used to collect all the information from the people concerned or the employees concerned, and he will record all the information. He was just considered as an accountant. He was just a record keeper. But today, the whole process is changed. Today, the accounting is considered as a management information system, MIS. It is the core area of decision making process. Without any accounting process, no decision can be made today. So, to that extent, the importance and the scope of the financial accounting has gone up. So, let us see chronologically how the definitions have changed since 1941. First, in American Institute of Certified Public Accountants, very popular organization, AICPA. It first 1941 defined accounting. It is the art of recording. It is not just collecting data and just like that recording, but a scientific approach should be there. It should look and feel like a record. And before recording, the classification of information. So before you record all the information, you need to classify into various activities. Whatever information you have received, that information you classify into. For example, raw material related information separate, salaries and wages related information separate, sales related information separate. So you will be classifying all the data and you will be recording all this information in various journals, and you will summarize in significant manner and in terms of money. So whatever information you are collecting and you are recording, these are all related to money only. It's all finance matters, transactions and events which are in part at least of a financial character and interpreting the results thereof. So it is not just collection of data, classifying the data, or preparing the documents. Today, the accounting definition has gone to an extent that it is not just recording, but the interpretation of the results also has become the part of the accounting job. So the scope has gone from mere record collection and accountant level to the management information provider. Means he is analyzing the data. The accounting is analyzing the data. The accountant will analyze the data and share that information. Let us see next what happened, how the definition has changed. The American Accounting Association again in 1966, it defined accounting is the process of identifying, measuring and communicating economic information. So from simple financial information to the economic information. So the scope again further increased to permit informed judgments. So why this information is prepared by an accountant is before the management take a decision, before they make any judgment, this will be supporting them. The information supplied by the accounting department or the accountant will support. So they will be taking informed judgments and decisions by the users. Now we know in my previous video we have already understood what are the various users. For example, the bankers. So for funding an organization, for funding a business, if they want to take a decision whether this business can be funded or a loan can be granted or not, they can look at the financial accounting and they can understand how the business is progressing, how the business is performing, how the cash flows are, and accordingly they can take a decision. Supposing given the management, if they wanted to borrow money, they can clearly understand from the financial accounting how the business is going, when they can really repay the loans if all they go for loan, or they should go for instead of bank loans, any bonds or equity. So any decision if they want to take, they should have a very comprehensive information, financial information. So this financial information can be supplied only through financial accounting. So from mere record keeping level to the information or the preparation of documents has gone to an extent that it is supplying of information for taking judgments. In 1970, again AICPA defined the accounting as the function of accounting is to provide quantitative information. So it is not just a record keeping or collection of data and classifying of data or preparing some information, but it is beyond that, a quantitative information primarily of financial nature about economic entities that is needed to be useful in making economic decisions. So by and large 1966 and 1970 definition, we don't find much of a difference, but end of the day the accounting has become today an important ingredient in managerial decision making process. So accounting means, in general, if we want to understand what is an accounting, is collection of data, classifying the data, recording the data, and analyzing and interpreting the data, and supplying the data to the management for taking informed decisions. Hope you have understood what's an accounting. So I thank you very much, and I request you to please subscribe and also press on the bell icon. Please share and like my videos. I am Professor Murlidhar Prasad. Thank you very much.